during this time, and we want to look at some of the accounting and business management features in QuickBooks, how you can use QuickBooks to make your business more profitable and to run better. You know, most people, when they're wondering how their business is doing and they're using QuickBooks, they'll open a profit and loss statement, and the bottom line will tell them, are we making money, are we not making money? But if we're not making money, or we're not making as much as we think we should, where do you go from there? Where do you start looking? What is it that you can do? What is it that QuickBooks will tell you that you can improve upon in order to improve the operation of your business? So that's what we're going to look at. It's going to be basic as we get started here, because that's where we need to go. So let's look at a real simple question. Why do we do accounting? Well, most people do that for a couple of reasons. One is government compliance, right? You got these forms that need to be filled out, or you have to get the information to your accountant so they can fill out those forms. And we're all concerned about audits from government agencies, which have been on the rise in the last few years. And so we want to be prepared for that. And that's really one of the big reasons that people will use QuickBooks. But the other, of course, is to make business decisions. And that's what we're really focused on today. So we want to be able to answer questions like what happens if we increase prices? Are we going to be able to make payroll next month, or pay our vendors on time, or are we 60 days behind? And what can we do about that? Those kinds of questions QuickBooks will also help you answer if you know how to use the tools within the program. So not unique to QuickBooks, but to all accounting systems is, of course, the reports. So we put information into QuickBooks in the forms that we create, that checks, invoices, bills, and so forth. That puts the information out. But then when we want to get information out to help us answer our business questions, we're going to look at different reports in QuickBooks to do that. Reports are based on the chart of accounts, so we have to have at least a minimal basic understanding of the chart of accounts in order to accomplish that. So what is the chart of accounts? So there are 5 basic account types in accounting, not just in QuickBooks, but in all accounting. So let's look at those. I know there are more in QuickBooks, but we'll address that in a moment. So assets. What are assets? Things that have value to your business. If I have cash in the bank, that's an asset. If I own a pickup truck, that's an asset. If I own a piece of equipment, if I own a computer that's for my business, that's an asset. And then they can be larger from there. Maybe I own an entire building or a factory or something. That would be an asset. Something that has value that I own. How about liabilities? Well, liabilities are kind of the opposite. That's money that I owe somebody. If I take a loan from the bank, obviously that's a liability. I'm going to have to pay that back. There are other liabilities that sometimes people don't think about. If I make payroll and I have an employee that makes, I'm going to use round numbers here, but if I have an employee that makes $100, I don't write him a check for $100, right? Because there's those taxes that need to come out. So maybe I write him a check for $80. Well, that $20 isn't really mine. It's still in my bank account, but it's not mine. It becomes a liability. And QuickBooks makes a lot of those entries, but you'll see those kinds of liabilities on your reports as well. Third type of account is equity. Equity, people struggle with a little bit more as far as being able to define exactly what that is. You could, in simple terms, say it's your ownership position in the business. So here's the theory. These 3 account types create a balance sheet. So as part of your financial statement is a balance sheet. That balance sheet will show assets, liabilities, and equity. Always assets equals the total of liabilities and equity. So the theory is this: if I were to liquidate my business today, sell all of my assets, get that money in cash, then I would pay off all of my liabilities. What I have left over That's the equity part of my balance sheet. That's my ownership position in the business. It's obviously a little bit more complicated than that in the real world because we're not really accounting for fluctuations in value of assets, but that's basically the idea. Well, the next two are a little bit easier. Income, accountants will use the term revenue. We all know what that is. As we make a sale, we make a $100 sale, we have $100 in revenue or income. And expenses, so office supplies, rent, payroll, that sort of thing. These, most of you, I'm guessing, are already using QuickBooks. And so you're familiar with setting up accounts. You know there's more than 5 account types in QuickBooks. But if you will look at them, you will see that all of them fall into these 5 basic groups. All right? There's different kinds of assets, there's different kinds of liabilities, but they're still assets or liabilities. So here would be a very simple example of a profit and loss statement. $500,000 in sales, $300,000 in cost of goods sold, gross profit $200,000, expenses of $150,000, leaves this particular business with $50,000 in profit. Now, cost of goods sold was not one of our basic account types, was it? It is an expense, but it's a special kind of expense. QuickBooks uses the term cost of goods sold. That's a type of account. It is an expense account, but it's a special type of expense account. We use that for direct costs. So if I sold inventory in my business, the cost of that inventory is cost of goods. If I buy an item for $5 and I sell it for $10, and when I sell that item, I have a cost of goods sold of $5, right? If I'm a contractor, I have cost of my jobs. If I provide some kind of service, the cost of providing that service is then a direct cost. So cost of inventory sold, there's the contractor example, would be cost of job materials, cost of job labor. Those would be the two big ones. If I was a machine shop, I have the cost of the raw goods going into my projects, plus the cost of the shop floor labor. If I have a business where I have technicians out in the field making repairs or doing testing, whatever, the cost of that technician performing those services is a direct cost and becomes a cost of goods sold in QuickBooks. So why is that important? Why do we care? Why aren't they just all expenses? Well, the direct costs tell us if our price markup is sufficient to cover those costs. In other words, if we have a really thin margin, we're buying widgets at $5 each, and we're selling them at $6, and the cost starts to creep up there, and we don't notice because we really have dozens of kinds of widgets. Pretty soon, it's costing us more to sell a widget than if we didn't sell it. We'd be better off not doing business. And so that's why we want to watch that cost of goods sold at the very basic level. The first thing we've got to do is we've got to cover the costs of doing the project or selling the item, whatever it is that we do, providing the service. We have to cover that cost first. And whatever's left over after that, then we can say, okay, can we cover the other costs of our business? Can we cover the rent on the office? Can we cover the utility bill, the telephone bill, and so forth? So that's that line, cost of goods sold. It's that terminology in QuickBooks, but think of it as direct costs. Lots of different kinds of businesses out there. Cost of goods sold is normally the term used for inventory-based businesses. But don't think of it that way if you're providing services or you're doing some other type of work. Think of it as direct costs. Then we have the other type of expenses, right? Right, advertising, office rent, utilities, and so forth. All right, let's go to QuickBooks. Okay, here we go. So here's that profit and loss report we were looking at before. This is the sample file in QuickBooks, the famous Rockcastle Construction, which we've had for probably 20 years as QuickBooks' most common sample company for their sample files that come with every version of QuickBooks. So people will look at a profit and loss, and usually the first thing they do is go to the bottom. They look, are we making money? Are we not making money? And that kind of satisfies them for the moment. If you look at that and you're not making money and you're unhappy and wish you were, but you just kind of hope things will get better in the future, that's probably not a good plan. What can we do to really discover where we're making money and where we're not within our business? Because usually, most businesses, part of it is making money and part of it may still be making money but not doing as well. So the sample company, of course, has a really high profit, but this could be a loss, or this could be a very slim profit. Whatever that might be, you look at your profit and loss statement and you will probably see something different than what we have here. So let's start back at the top then. I have reduced all the income, all the revenue accounts here to one line. And then this is the section we've been talking about, that cost of goods sold section. These are direct costs for Rockcastle Construction. And then when we subtract that, that's the gross profit or the margin. So what we have left over after the cost of selling whatever it is that we sell or do. So the first thing I want to do is I want to be sure that I'm accounting for all direct costs, right? And if my QuickBooks isn't set up right, I'm not doing that. And that's the first thing I have to do. So I get a number here, an accurate number, and I can say it costs me 60% of what I'm going to get for the job just for the costs to do it, or 70% or 50, whatever that might be. But I want to know that number and I want it to be accurate. So the first thing I'm going to do, I'm going to start looking down here through my expenses and say, have I got everything set up correctly here? And in the sample file here, I find a line for job materials. Well, job materials for Rockcastle Construction, that's a direct cost, right? That's the products going into the jobs that they're doing. So I want to fix that. I want that to go into the cost of goods sold or the direct cost section. Easy to do. I go to the lists pull-down menu, go to my chart of accounts. I scroll down into the expense section and find job materials right there. Then I'm going to click on the account button. I'm going to choose edit account. Now I'm going to tell QuickBooks, I don't want this to be an expense type of account. I want it to be a cost of goods sold type of account. Save that. Close the chart of accounts. My profit and loss refreshes. I'm going to collapse that income line and job materials. There it is. Now it's in that direct cost or cost of goods sold section. And it's harmless. I mean, there's no bad side effects from changing an account type like that. It's perfectly fine. And it will only be a benefit to you. Now, you may have several things like that, and you will have to look through your accounts on your profit and loss. Looking at on the profit and loss and then going to the chart of accounts is probably the easiest way to determine whether they're in the right place. So one that's just a little bit, maybe a level up from that as far as complexity, and that is if you do payroll. So I look here and all my payroll expenses are down here in the expense section of the profit and loss. Well, these payroll expenses are for the people that are out there doing the jobs. That means it's a direct cost of doing the job, right? So I have to change that. Somehow I have to get that up here into the cost of goods sold section. How do I do that? I go to lists, payroll item list. Let's make that a little bigger. and I'm going to look at regular pay. So most of my people, I'm paying with this regular pay payroll item. I click on the payroll item button, click edit, and this is just the name. I'll click next. This is telling QuickBooks what account should this post to. And so right now it's posting to gross wages, which is a sub-account of payroll expenses, which is a regular expense type of account. That's not what I want. Now, I don't have a job labor or payroll cost or whatever type of account in the cost of goods sold section of my chart of accounts. But QuickBooks makes this really easy. I'm just going to type out the account name that I want. I want to call this job labor, okay? And since job labor is not on the account list, you see it isn't opening the list and making any suggestions for me. So this is a totally new account name, even though I'm editing a payroll item. If I click finish, then QuickBooks gives me an opportunity to set up that account without having to close out, go over to the chart of accounts and all that. I can do it right from here. And it tells me that account isn't found. What do you want to do? Do you want to cancel and pick something else? Or do you want to set this up as a new account? Well, we want to set it up as a new account, right? Okay, so the first thing I want to do is I don't want this to be an expense account, right? That's the whole purpose of this. So I'm going to make that a cost of goods sold type of account, save and close, and finish with my editing of my payroll item here. Now, here's a message that I want to point out to you, and I can't really tell you exactly what to do in your case, but maybe give you a little guidance here. So what this is asking me is, let's start at the bottom here. The bottom option is don't update any transactions. That is, all the paychecks that have already been created that have used the regular pay item, they'll still be in the expense section of the profit and loss report under that gross wages sub-account of payroll expenses. Only the new paychecks that we create going forward will post to the new job labor account. I really don't want that. Another option is to update the transaction starting on January 1 of 18. Well, 2018 is the current year in the sample file. That's why it's picking January 1, 18. Trying to keep things within a single calendar year so that we don't make a change in the middle of the year. This is just a change in what line on the profit and loss report that number is going to report on. It's going to be job labor in cost of goods sold instead of gross wages in expense. So it's not like that's going to affect any payroll forms, W-2s, anything like that. So I'm going to pick the option, update all existing transactions to use this new account. So let's go back to our profit and loss report. And I'm going to collapse that income line again. We're going to look down in this cost of goods sold section, and there we now have a line, job labor. So all the paychecks that we have created in the past that use the regular pay item now posts into this direct cost section under that line, job labor. If we look down, we still have some expense. Here's our payroll expenses, gross wages. This is where all of those dollars used to be. And that's because we have some other payroll items that are still posting here. The overtime item, there's an employee on salary in the sample file. That item still posts here. So I could fix that by going back to the payroll item list and editing those other payroll items in the same way I just edited regular pay, and get them all reporting up here into that section if that's what I wanted to do. Just one quick note, if I have both, so say I have a bookkeeper, I want that bookkeeper is not a direct expense, right? And we're using jobs as the example here, but it could be if you're providing technical services or repair services or any of a number of things, we're separating direct costs from our other operating costs. That's the main thrust of this. So if I have that bookkeeper or somebody that is not a direct cost of the service I'm providing or the job that I'm doing, perhaps I want them in the expense section, in which case I just set up separate payroll items. So my workers that are direct cost, directly working on the project, they use one payroll item and the bookkeeper uses a different payroll item, and they can post to different places on the profit and loss. Fine, that is no problem. Okay, well, that kind of gives you an idea. If you're looking at your profit and loss report, you want to be looking down those lines, those rows of expenses, and making sure they're in the right place. That direct costs are in cost of goods sold, and that other expenses are down what you'll hear the term sometimes below the line. That is below that gross margin or gross profit line. We're going to make a couple of other videos in this series that will show you some other tools in QuickBooks that you can use to kind of look at your data, look at your QuickBooks information, to find those smaller component pieces, those specific areas in your business that might not be making the money that you think they should. And so you can decide then what to do about that. But QuickBooks will give you that information if you know the tools to use. So I hope that's helpful, and keep an eye out for those other videos. If you have any questions, you can leave those in the comments below. Thanks.